which of these do I already have? Okay, do you have stable income? Do you have good credit? Are you working on improving your credit? Do you have a savings for a down payment? And do you have a willingness to prepare? Okay. Number two, what is one area I could improve in the next 90 days? Okay, what can I do that would be meaningful to increase my readiness? And the last one is, am I waiting to feel perfect, or am I willing to move forward prepared? Welcome back. So in this video, we are going to talk about conventional loans, what they are, who they're best for, and why they are often misunderstood. So a conventional loan is the most common type of mortgage in the United States. Okay, unlike FHA or VA or USDA loans, conventional loans are not backed by the government. Instead, they follow guidelines that are set by Fannie Mae and Freddie Mac. And because of this, conventional loans tend to reward preparation. Okay, they work best for borrowers who have stable income, who are consistent with their credit patterns and some level of savings for their down payment. So anytime I think of a conventional loan, convent, right, I always think of sisters, like they're nuns, right? They're good credit, and everything else is good. But that's just my way of remembering it. So one of the biggest myths about conventional loans is that you need 20% down to qualify for a conventional loan, and that is not true. Conventional loans, depending on your entire profile, you can go in as low as 3% down. Okay, so but the thing is, anytime your interest or your down payment is less than 20%, there is something called mortgage insurance that is required. And the key difference is that with conventional mortgage insurance, the mortgage insurance is not permanent. So with conventional, you can go ahead and have that mortgage insurance removed, opposed to with FHA usually, and we'll talk about FHA more, but usually you cannot have it removed like you can with a conventional loan. So either you can get it removed when a property appreciates, like for example, you bought a property, you only put 5% down, and let's say you just got really, really lucky and property appreciates 15%. That's 20% right there. You can get that removed. Or let's say you pay down a lot of that loan where now you're at that 20% mark. You can go ahead and get that removed as well. So this flexibility is one of the biggest advantages of having a conventional loan and getting conventional financing. Conventional loans also offer more flexibility in structure. And borrowers can choose either a fixed rate. Remember the last video, we talked about fixed rate mortgages as well as adjustable rate mortgages options. And the terms are usually 30 to 15 years and sometimes even 40 years. And I think the government's trying to bring in 50 years, but that has not happened, so don't quote me on that. And because a conventional loan is really widely accepted, they often strengthen purchase offers, okay? Sellers and listing agents tend to view them as lower risk compared to some other type of loan. So for realtors, what this means is, usually whenever a buyer comes in well prepared and they have a conventional loan opposed to somebody else who bids on that property that has an FHA loan, if everything else is the same, the seller is probably going to choose the person with the conventional loan. It's a safer option for them, okay? So that said, conventional loans are not for everyone and, at every stage. So if a borrower has limited credit history, for example, if they've got high debt, they've got minimal savings, they've got, another program is probably more suitable for them. A conventional loan may not be. But the goal is not to force a conventional loan on anybody, okay? The goal is to match the loan program to the borrower's current reality and their long-term plan. So when conventional loans are used, when they're used appropriately, they can be one of the most cost-effective and flexible paths to home ownership, okay? So conventional loans are great, but only if you've got that good credit, if you've got something saved, and the other requirements that I shared with you. So if you have any other questions about conventional loans, you know where to reach me, and I'm going to give you guys a mindset exercise as always. So here's a few questions to ask yourself, okay? Number one, which of these do I already have? Okay, do you have stable income? Do you have good credit? Are you working on improving your credit? Do you have a savings for a down payment? And do you have a willingness to prepare? Okay. Number two, what is one area I could improve in the next 90 days? Okay. What can I do that would be meaningful to increase my readiness? And the last one is, am I waiting to feel perfect, or am I willing to move forward prepared? Okay, this exercise is not to rush a process. Okay, once again, I just want you guys to start giving attention to the home buying process, because a lot of times we think, you know what, I'll worry about it when it gets there. When it comes to home buying, you really have to start preparing, especially whenever banks want 2 years of taxes and work history and all of that stuff. You really cannot wait till the last minute, and you'd be surprised how it starts to. I've had homeowners that thought, oh no, it's going to take me a couple of years, and they ended up buying a home in a lot less time. So it's about replacing delay with intentional preparation. Readiness creates options, and preparation builds confidence. I really believe that, and I'm going to help you guys prepare. And that is why I'm doing these series for you. So in the next video, we're going to talk about what a FHA loan is and if it's the right kind of loan product for you. And with that being said, I look forward to seeing you in the next episode, and make sure you like and follow for more.